Hello guys, and welcome to my YouTube channel once again. So in today's video we are going to analyze the volatility 75 index. Okay, 75 1s index. All right, so we're going to do a kind of a top-down analysis. I want to show you guys how to actually spot some key zones in the market and how to spot a high probability trade setups. All right, first of all we have to go to a higher time frame. I can go up to the weekly time frame. This higher time frame that we get to is actually to spot the direction of the market. So you can see the overall direction of the market is actually bearish. The market keeps on creating lower highs and lower lows on the daily time frame. So on this time frame, once we spot these zones, once we're able to identify the trend, the next thing is to spot the zones that are available on this time frame. Right now you can see we have a nice zone here. You can see we can use a line to indicate our zones, because on this higher time frame, if we use a rectangle to mark out our zones, they become too large when we get to a lower time frame. So we use a line to mark our zones. Then there's another zone right here. As you can see, there's another zone right here. How am I able to spot these zones? You can see where market bought and sold previously. Those are the areas we are marking. Like here, we can see market bought from here, then finally broke through it, came back, retested this zone, then sold from it. Then you can see market also on getting to this zone, there were rejections. Even when the market forced itself to sell down to this level here, with this candlestick, you can see it's still closed around here before it bought to retest this other zone. So there's a zone right here too, where and that is where the current weekly candlestick is selling from. All right, so we spot those zones, and there's another zone. The next zone is the this particular one here. Excuse me. This is another zone right here. Why I call this a zone, actually marking the tip of the wick of the candle, the previous candlestick, this bullish candlestick, because it's a weekly time frame. The tips, the highs and the lows of candlesticks on a higher time frame are actually strong support and resistance points, zones on lower time frame. So I have to mark this because on the 4 hourly time frame we might spot it can become a very strong zone for us to consider. All right, so that being said, we now can go to a lower time frame, go to the daily time frame to still see opportunities there. All right, so I'm going to the daily time frame. What do we have here? We can see the nice sales the market has been doing. And if you look closely, for those of you, if you've been following my videos recently, you can see the market structural strategy playing out here nicely. We had a high from here. This is a recent lower high, the recent lower high the market created, and it sold to this particular low here. Then on getting to this low, you can see the retracement it did up to this level. You see where it retraced to, and then let me get the arrow line too. It retraced to this level right here, and this is where we have a golden zone, the 61.8, and between the 61.8 and the 50% levels of the Fibonacci retracement tool is actually where we have the key level there. And you can see that's sorry, our golden zone, and the market actually reversed on getting to that zone. All right, so you can see after a bit of consolidations, the market sold nicely, then little retest, and it sold massively. All right, in fact, one of my private students spotted this setup. The unfortunate thing is that I missed it, and I did not take this trade because I had so many things. All right, looking at that's one of the disadvantages of having too many charts. So that being said, you can see how the market sold nicely. So on this daily time frame, you may still be able to spot some other zones that are available on this chart, but right now I think we do not really have any strong zone to mark right here, because when I mark zones, we are considering zones where the market moved significantly, where we had a significant move from, or there is a significant move to. All right, when there is a significant move from, and where there is significant move to, those are the zones we consider to mark. Then if you go down to the 4 hourly time frame, let's go to the 4 hourly time frame to still spot opportunities. All right, so on the 4 hourly time frame, now one thing you guys, before I even get there, I have to make a little explanation right here. You see that when the market actually got to this level, then it started selling. You may miss an opportunity on the market doing this. You may miss an opportunity after the consolidation But unfortunately, okay, let's say you missed it. All you have to do is to go down to a lower time frame to spot pullbacks. Wait for the market to do some pullbacks so you can take a you can get an opportunity to join with the sales. All right, like here there's a little zone somewhere around here. If you look closely, you see the market had been rejecting this level. You can see the wicks on this daily time frame. Then finally we had this bearish candlestick that went below all these wicks. This is actually a breakout. Then you see the market sold down to this level. Then we had another bullish candlestick buying to this same zone here and dropped a wick to that indicates a rejection, and it gave us a bullish engulfing candlestick. Now the students who understand the engulfing candlestick pattern will nicely find an opportunity from this trade if they actually spotted this. If they were on the chart or they saw this when it happened, this is a nice opportunity to enter the sales, even almost at sniper entry, to hold it up to this level if you can possibly do that. All right, but following the strategy, as long as the market remains bearish, this profit target must be hit. All right, so this would have been an opportunity. If you missed an entry right here, then you should, if you missed, then you can take a re-entry at this point. Then another opportunity would have been on lower time frames. You can go to as low as maybe the 4 hourly time frame. You can go to the 4 hourly time frame to spot some pullbacks or some consolidations that can help you actually re-enter the trade, get an entry. So let's quickly go to the 4 hourly time frame. All right, let's go to the 4 hourly time frame, guys. On the 4 hourly time frame, all right, so on the 4 hourly time frame, we can't really spot any the reasonable pullbacks here. Only what we are just mere consolidations. Consolidations all through. You can see the whole of this. These are just consolidations, and I believe you will just get tired if you keep on looking at it when this was forming. Because if you look at this, the 4 hourly candlesticks, and we had so many of them right here before the market started selling. So this happened for up to at least 2 days. 6 of these candlesticks make a day, so meaning we have up to 12 here, I think, or so. Then meaning this happened for like 2 days, then except you patiently just wait and follow up with what the market is doing. All right, else you will just miss the opportunity. You see, finally market sold massively to the downside. Market sold massively to the downside. So now the question would be, how would you possibly have entered if following these lines we've drawn? Now, what you help yourself to do is to understand when there is a breakout. Like I said earlier, look at this zone. Market bought from this zone. Then you see all this while the market had been rejecting this zone. Market has been reacting to this zone. Then finally we had a bearish candlestick that went below this zone based on this line you're seeing here. Then it retraced again to retest this line. Also, you can just take an entry from here, then set your stop loss above these other bearish candlesticks. Then just watch out. Now you are doing this because from your analysis, we saw on the higher time frame, weekly time frame, and daily time frame, the market is bearish, and with the market structure strategy, the market has started selling from a very strong zone. So we are expecting the market to do what? To do the sales down to this level. So whatever, if you take an entry right from here, we're taking an entry here in the direction of the overall trend. It's not a bad idea. Take the trade from this point, set your stop loss above, and allow the market to run down nicely. All right, if you get kicked out, then you can just wait for a re-entry, because it can possibly happen. All right, so now you can see the market sold nicely and it got to this zone, which is a previous support zone that the market created when it rejected on the weekly time frame. All right, and there is a break and close below. Anyway, there's no close below yet on this zone. So if this for the current 4 hourly candlestick, which is below this zone currently, continues and closes below this zone, then the market stands a chance of continuing bearish. But if eventually it comes up, maybe within the next 3 hours and 15 minutes or so, or whatever, it comes up and closes bullish on this zone, no longer below this zone, so there's a very high chance the market would want to reverse from here. The market will want to reverse to start buying. All right, so this video is already too long. I wanted to make a very short video, but unfortunately it is long. So if you can just be spotting this kind of stuff, you mark your zones correctly, then you can be taking trades. You can be taking some trades. Even as it is right now, if you go to lower time frame, you might still spot opportunities that would have been possible during this long bearish movement. All right. So, but then notwithstanding, we won't. I don't want to make this video longer than what it is right now. I just hope you've learned one or two things, at least how to identify strong zones. Remember, the strong zones are those zones that the market had moved significantly. Those are the kind of zones you want to see. Once the market gives you such a zone, mark and wait for the market to get there. Once it gets there, you look out for some reactions, and then you can take a trade depending on what you see when the market gets to the zone. Like this zone, you can see we couldn't take a trade because there's no confirmation the market is ready to reverse from there. So taking a trade at this zone is wrong. Will be very wrong until the market reacts there, forming some maybe consolidations or chart patterns or maybe candlestick patterns that confirm that the market is actually going to reverse. All right. So that being said, guys, like this video, share your thoughts in the comment section, and reach out to me if you are interested in my mentorship. Although right now, some of the mentorship programs have been closed in terms of registration. But if you have any concerns about the mentorship, just reach out to me as soon as you can. There's a link in the description of this video. It's going to take you to my Telegram channel. From the Telegram channel, you'll find my direct contact, whether WhatsApp or direct contact on Telegram or WhatsApp. You reach out to me, especially WhatsApp. WhatsApp is even faster. Telegram somehow delays messages at some point. So reach out to me, and we will see in our next video. Stay blessed. Peace out.